evening, Trade Flare family. Welcome back to the nightly breakdown, where we break down what happened today in the stock market, as well as give you an idea of what we're looking at into tomorrow. Now, before we head over to conduct a technical analysis of the SPY and 5 stocks, let's look at some key points to get a broader view of where we stand. So the first key point I want to talk about is the yields bounce that we saw today. So we saw the treasury yields get a much needed bounce, which was partly contributed to the fact that China did not end up cutting their benchmark rate today, and the decision was set to be today. And honestly, this proves my China indicator theory correct, and the fact that China didn't have to cut the benchmark shows the economic slowdown from the Delta variant may not be as bad as we may have anticipated, or at least as bad as the bonds were anticipating. But as far as today goes, we saw the yields bounce, and so did the market. We especially saw the bounce within the small caps, the IWM, and with small caps and growth stocks getting torched Thursday and Monday, the bounce that we're seeing may represent a bullish trading opportunity, so keep your eye out there. The banks also love to see the rates going back up, and this may have sparked a reversal in the XLF, so keep your eye on that correlation. As you can see here, we are at a point where we could bounce. Bonds tend to react nice to technicals, and as you can see here, we have a long solid wick right off of the 50% retracement mark, and this is a make it or break it level for a bullish trend to stay intact. At this point, I'm looking to potentially play puts on TLT, which would be the inverse of the 20-year bonds, and that means my prediction is the longer term yields will go up. And the other thing to keep in mind is there's also a 20-year bond auction tomorrow, and with the China fear out of the way, I think yields could bounce and the market could focus its attention on earnings. And that brings us into our next key point, which is key earnings. So if yields are chilling out, the attention is all on earnings. We also can't forget that next week we have big tech earnings and the FOMC, so keep that in mind. We're gonna be in for more volatility. We may start to price in for the big tech earnings this week. We're probably gonna see some run up in those option chains. We're gonna see some implied volatility and some really nice opportunities to make some money. So for key earnings tomorrow, I'm watching Intel, Abbott, Danner, AT&T, and Unilever. So looking to see if there's gonna be any surprises or moves out of those. We got Netflix after hours, and they actually missed on a few things, but they held up. So we could see a nice day for the NASDAQ tomorrow if they ended up holding up. Now headed over to our last key point, which is as always our indices and our sectors. And looking at our indices today, the IWM led all of the indices, so the small caps were leading the way. In the big cap indices by percent gain, the Dow was the leader today, the S&P was right behind, and the Qs were the laggard. As far as sectors went, industrials, financials, real estate, and tech led the way. On the downside, we were really slow in the staples sector and the utility sector, and these sectors were doing well when there was more fear in the market. As you can see, the UVXY today was down a lot, so a lot of the fear from yesterday left the market today. So now that we have a broader idea of where we stand, let's head over to do a technical analysis of the SPY ETF, which tracks the S&P 500 index. So looking at the SPY daily here, we got the bounce off of this 50-day moving average. And this was after some pretty aggressive selling after we saw that down Friday, down Monday. But something to note is what we've done this year, and we have not sold and held through that 50-day moving average for very long. The fact that we were brought back up at that 50-day SMA again, and then we quickly filled the 1% gap down for Monday is a great sign heading into tomorrow. As long as treasury yields are bouncing, the SPY could keep going higher. Looking at the daily here, we're targeting the top of the range. If we do open up above the halfback at 432.30 tomorrow morning, if we get that move to the top and 434.78 holds, I would expect some chop within the range until it's broken either way. If we break the top, we're looking to double that range and set a stop right underneath at 434. But overall, looking pretty good as we stand on the SPY. Next, let's head over to our Qs, and we're looking at the daily here. We have a similar situation, but in my opinion, this one looks a little bit more bullish than the S&Ps itself. The fact that we closed above the filled gap, the fact that we held up into the end of the day, especially with big earnings next week, this is a nice move and a nice bounce. So similar to the SPY here, we're looking to take a play at the top of the range here. So looking to take a play all the way up to 362.57, and that's if we open up above the halfback of this range. As it stands, the Qs look really strong and geared up for another run pre-big tech earnings. And if we take out the top of that range, a realistic target would be the doubling of that range. So we'll be looking around $370 pre-big tech earnings. So just something to keep in mind as we head into the rest of the week. So now that we have a broader idea of where we stand, let's head over to the watch list, starting off with FedEx. So looking at the daily here, looking at this energy that we're getting off of this support trend line that has held up 3 or 4 times now. And now we're starting to see these pandemic winners start to take off, and I want to see if FedEx gets a little bit of attention again. Now I'm looking at that $300 level. I think there's, some importance around that level psychologically being a whole number, and $100 level, as well as the fact that it is acting as a resistance here. Now with a nice break of $300 with some strong volume, I really do think 315 is in play. So keeping my eye on FedEx as we head into the next few weeks. Next up on the watch list is Chegg, and looking at this one, I'm seeing an obvious cup and handle pattern breaking out here. And I like this one for the back to school trade, and what really needs to happen here is for this 200-day moving average to break so we can take out these highs at around $88, and then we probably are looking at a huge breakout all the way up to $96. Historically, we've seen this thing run in July, so let's see if that will happen again right before earnings. So right now I'm really looking at those August $95 calls. This could be a really nice pre-earnings play, so keeping my eye on Chegg. Next up is Peloton, and Peloton was a huge winner during COVID, and it was destroyed recently with more fear of lockdowns and more worries about variants, and stocks like Peloton have been really positioning to break out. Looking at the daily here, clean reversal pattern that's taken some time to play out. Reverse head and shoulders, we've seen this before, we've done this before. The horizontal neckline is at 124.62, which today we cleared and closed above, and we also have this long wick off of the 200-day moving average. Volume is increasing, and at this point, if we take out the $128 level with volume, it could be off to the races. So definitely keep your eye on Peloton, especially with the news regarding the variants. Be careful with this one, it's got an expensive option chain, so make sure you're knowing what you're buying. Next up on the watch list is Square, and Square is nice because it gets a little bit of energy from the banks and a lot from tech. So when both are gassing, this thing does really well, and today that's exactly what was happening. It's also kind of right in the middle here, so it has room to run. Looking at the daily, we have a deep retracement, an obvious hammer candle follow-up breakout, and now we're looking to take out this $250 level with volume. If we do, probably we'll get some resistance at these highs over here, but I can see a $258, $260 level being reached if we get the break of that 250. And we made a lot of money on day trading this one today, and we probably could do the exact same thing tomorrow, so let's keep our eye out on Square, especially heading into tomorrow. Last up on the watch list is Etsy, and Etsy is another company that did really well during the pandemic. And looking at the daily, this is actually a cup and handle pattern, long rounded bottom and a flag bounce right off of this 200-day SMA, and volume has been solid off of this bounce, so we could be getting more energy as we head into earnings in the upcoming 2 weeks. So as it sets, it's looking to take out the 199 level. If we do, we're looking at $206 at these highs over here, but as it sits right now, we're setting up pretty nicely to test that $206 breakout level. Upon the breakout, we're looking at a possible run all the way up to $225 before we run into any structure. So definitely keeping my eye on Etsy for a pre-earnings run-up play. And that wraps up tonight's nightly breakdown. If you enjoyed the video, if you gained value, or if you learned something, make sure you hit the like button and don't forget to subscribe so you can get notified whenever we post any live or educational content. If you're looking to join our team and be surrounded and motivated by our online community of traders and investors, as well as gain access to trade signals that let you know whenever we make a trade, check out the link in the description below to join our Discord, gain full access by upgrading to TradeFlare Pro, get half off your first month using the discount code TFPro2021. But don't be mistaken, we are not financial advisors and none of this is a recommendation. The stock market is risky and you could lose money, so use the information inside these videos at your sole discretion. And as always, you cannot forget that time is your most valuable asset, so quit wasting it. Get up, get out, and go get it, my friend.